All you need for this model is the understanding of order flow, the understanding of liquidity, and the understanding of order block. These three elements together, you have one of the most powerful ICTs model out there. The first thing you need to do is to come to the daily time frame. It will give you an understanding of what the buyers in price is and what the order flow is going to look like on the lower time frame. So as you can see, just by looking at this price from this level to this level, you see that price has been pushing higher, and one mistake traders make is when they see price pushing higher like this, instead of traders to take part in the order flow, what they try to do is they just try to anticipate the high to be formed so that they can catch the top. It's not something you want to do. So as long as this price keeps going higher, there is no need for you looking for short position in this market. Just focus on looking for longs until price decides to start pushing to the downside. That's one of the safest way you can trade in this market. So straight to the early time frame, and what you want to use to confirm this is order flow. So since price is bullish, the type of order flow you want to be seeing is bullish order flow, something like this, creating higher highs, higher lows, higher highs, higher lows, just like this. And how do you partake in this move? As you can see it in hindsight, it looks very simple, but in reality, when you enter the market, you might not know when the retracement is done for you to take part in the move. And that's where the concept of liquidity comes in, and this is how you go about it. Liquidity and order block, this is where the concepts really come in. So if you consider this move from here to here, when you move to the lower time frame, anytime you see a move like this to the upside and it creates a swing low just like this, and price comes back taking out that swing low, after taking out the swing low, push to the upside, then anticipate price to begin the continuation of the order flow to the upside. That is, you anticipate it to at least come for this previous high. So how do you partake in this? What you have here is that you have sell side liquidity taken out just right here. So what I want to draw your attention to now is to consider the movement from this high to this low right here. So this high right here, then this low. This movement from this high to this low on the lower time frame, you're going to see something like this. Okay, more like a bearish order flow, just like this. So this is what you are going to be expecting to see on the lower time frame. And how do you partake in this? The moment you see this move like this, bearish order flow, series of lower highs and lower lows being formed, how you know that price is ready to move to the upside is after it has taken the sell side liquidity like this, you want to see a move that will move impulsively to the upside like this to take an internal structure. That will give you more like a shift in market structure. I think I should change this color to something else. Okay, that will give you a shift in market structure just right here. You get a shift in market structure here. So the moment price is trading back into this level, usually you're going to have series of down close candle here with this internal structure to the downside right here. You're going to have a series of down close candle here. So the moment price is trading back to those series of down close candles, that will be your order block, and you're going to have something like this as your order block, a range like this. Let's change the color to something else. Okay, you're going to have a range like this as your order block. The moment it's trading back into that order block, that's when you should engage price. So you might not see that here, but if I go to the lower time frame, let's say the 15-minute time frame or the 5-minute time frame, and we consider this range from here to here, definitely we are going to see something like that multiple times. So let's just do that very fast before I finish up with the video. You want to zoom out a little, you don't want to be too zoomed in, so that you get when you zoom out, you'll be able to see the structure very well. So right from here, after this outside liquidity was taken, you see the order flow right here from this level to this level. The order flow that took out this outside liquidity, look at it here. We have a swing high here, lower low in the form of lower low. We have another swing high here. So to partake in this move, you want to see an impulsive move to the upside that will cause a shift in market structure, just like this, just like what we have in price here. So here is your shift in market structure. How do you get your order block now? Now look at the series of these down close candles. 1, 2, 3. This is one order block for you. So you want to mark it out just like this. From the opening price to the low, the lowest low. Just mark it out just like this. So whenever price is trading back into the opening price here, you can put your buy position and aim for these relative equal highs or expect price to continue moving to the upside. This is the big picture of the model. But if you look at these movements in price here, what looks like a consolidation right here, it can really make sense to you if you still apply what you did on the bigger picture to this. And why was this valid? Why was this other block valid? I think I need to mention this before I continue. You saw that it took out the sell side liquidity right here. So it took out the sell side liquidity right here. So that's very, very important. And we're in a bullish market. So look at this. After this push, consider this movement from here, this low right here to this high. Look at the order flow. Price moved, created a low here, moved higher, created another lower high here, or higher low, right? Higher low, right? Yeah. And then moved, created another low here. So this is the order flow for this range. From this level here to this level here is the order flow. So the moment price started moving down, taking out this low, you want to consider it as liquidity being engaged. Why? Because you are in a bullish market, creating this shift in market structure. How do I know this is a shift in market structure? We took out the sell side liquidity here. Consider this range to this range here. After this high was taken out, we had this high made, traded to the downside, we had another high made. So this was the order flow that took out this sell side liquidity. So to continue higher, I want to see price cause a shift in market structure here, which we had here. So it happened just right here. So that's a shift in market structure right there. So you want to mark from the opening price of the order block down to the lowest low, and you don't want price to come down to the low right there. So you can see that price traded down but never came to the lowest low of the order block. So it used it as a form of support to continue pushing to the upside, and you can replicate that in all these moves. Sell side liquidity taking, impulsive movement to the upside, series of down close candle 1, 2. You just mark it out as your order block. You don't want price to take it out. So this is how you frame your order flow. Anytime you're looking at a bullish market, you want to see sell side liquidity being taken out and an impulsive move to the upside, then you just mark your order block just like that. When price trade back into the order block, you use it as your entry. That's basically how you can leverage or take part in moves like this. And if you check this range, this bigger range, from here to the high here, you see multiple setup. But imagine you now narrow it down to like London session, New York session, where volatility in price is higher. You see a whole lot of interesting entries there. So I believe this one was insightful. I just thought I should make something that you can really work with, especially for those that are new and are confused with the model to begin with or how to trade. This is more like the foundation of every model you have there. Every model you have there needs a liquidity to be taken out. Very, very important. Needs a target, needs you to understand order flow. So this, like this, I call it the mother of all model. So I believe it was insightful. If you want more videos like this, do well to like this video and drop something in the comment section. I'll see you in the next one. If you are not subscribed to my channel, hit the subscribe button right there to support this channel. Thank you, and I'll see you in the next one.